So we're going to start out with DuPont, DD, and we are going to look at our weekly chart and see if we can begin to find a couple things that stand out on our chart and serve to a high level of accuracy. Let's start out here. We're just going to go to a 2-year weekly. And as you look at this chart, just by eyeballing it, this is something we got to get good at doing because, when we start the eyeballing of those charts, we want to be able to pull up a chart and go, ooh, I bet this would be a good blank chart, a good Fibonacci chart, a good channel chart. You name it. What do you see on this chart? We see that 21 simple moving average on our weekly chart holding up pretty well, don't we? We see it holding up pretty well. So how can that help us with trading it? We could say, before we enter a long position, we need to do what? Before we were to enter a long position, we would want to do what? Verify that the weekly chart is moving positive from the 21 simple moving average. Sounds pretty simple, doesn't it? Does it have to hit it exactly? No. Because moving averages are not resistance, they are not support. If they were, consistently, you would never see little price wicks go below them, and it would always come down and touch it exactly. But we see consistency on this, right? Let's just look at it. If you were to buy as the stock moved positive after coming, even in these cases, within 50 cents of the weekly chart's 21 simple moving average, would you have made a winning trade? One, two, three, four, five. And then even here going, you know what? Goes back up above 6 times. What kind of trade accuracy is that showing you? Yeah, I'd say pretty good. I would say pretty good. What's the other thing we'd want to verify about the 21 simple moving average on the weekly chart before we enter a long? Would that have been a good long right there? Or right here? Yeah, just keep it simple. That the 21 simple moving average is moving up. As a matter of fact, it'd be pretty easy to say that even a long-term investment, I mean one that lasted a year now, would have been best made on the 21 simple moving average, right? From the weekly chart. The 8 moving average, okay, it would have got you in down here. You got out here, back in at a higher price than where you stopped out at. You'd have been out over here and back in at a higher price than where you stopped out at. But the 21 simple moving average thus far would have given you one long winning trade, right? What else do you see on the chart that could serve up some accuracy for us? Channel. So it's held a consistent channel. Looks like a pretty good sized failure of that channel, doesn't it? Let's look at some Fibonacci extensions. We'll just go over here and just do a couple points here. We'll go from, from a low to a high to a low. No, okay, it's got a little bit of accuracy here, but does it stay consistent? Not really what you would have expected. It took it 3 highs to hit a target. But we can live with that. We just know that we have to go over here for our next one. Okay. Looks pretty accurate, doesn't it? From this move here, got you real close there. 2 different times. From here, this sequence would have messed you up here and here, but definitely held it nice here. And then using the same sequence there, looks pretty accurate there. So fairly accurate as far as targeting with Fibonacci extensions. So one thing we find is we could very easily put in our notes for DuPont that a positive move from the weekly chart 21 simple moving average with a target based on Fibonacci extensions. And what would be the final thing we'd want in our notes when talking about an options trade? Yep, how far out? Well, let's look at a couple of these. We started here marking this run and seeing that this got us close, but really here is where we were really close to our target, right? So where it started on July 1st and ended on September 16th, how long was that? Two and a half months, right? And how far out would we need to play for a 2.5 month move? Because, let's look at a couple of these others. Even here, if you played this move up into what was this target, then you played for September 2nd till December 30th. Yeah, it's a weekly chart, so each candle equals 1 week. And we want to talk about trades off this weekly right now that give you a maximum potential. And you're talking from 2.5 to 3 months to 3.5 months to really have to stay in this trade to maximize the potential on this one, right? For calls. Believe it or not, I can tell you right now, this is not a good puts chart. Do you know why it's not a good puts chart? Because your pullbacks are typically sideways with one big candle. Sideways with one decent sized candle. Sideways with one big candle. What that means is if you call the top, you got time decay, time decay, time decay. Whew. It's not a good puts chart. But on the weekly, you can clearly see, using the positive move from the 21 simple moving average and targets based on your Fibonacci extensions, seem to be a pretty good fit. Let's go over to our daily chart. What do we see with our daily chart? What do you see with that daily chart? I'm going to give you a hint. Yeah, before I go ahead and take them out, I'll tell you there's way too much choppiness with the 8 and up through here that it would have ruined the percentage of winning trades. Look at it like this. Because those moving averages, believe it or not, on the daily are actually going to hurt you more than they're going to help you. I'll give you another hint. Sneeb would love a chart like this. Absolutely. Let's put our channel tool on the daily. And let's just go through a couple areas here as we look for where we want to go long. And I don't want you to look at the times where it breaks a channel, because what typically happens when you break a channel? The little kiss back move, right? You broke the channel, you come back and retest it. See, that's how the chart kind of tells you, hey, I'm ready for a new channel. You broke below the channel, you came back and retested it. Hey, I'm ready for a new channel. Here you didn't quite retest it, but you definitely got your move going. Look here, you broke below it, you came up and retested it. And by the way, on this last channel, when you broke above it and pulled back in it, that was your stop, wasn't it? If you were long through this, here's your channel, boom, boom, boom. You got 1, 2, 3, 4, 5 touches, and then you break above it. It's a pretty valid channel. That's now your support line. What was your top channel line? You come into your down channel. You break above it. Look at the next day. You actually come down lower than the prior day. You retest it. Now, let me talk about something else with channels too real quick. On a day like this, where you fail below your channel, is that your stop out day on a long? What has this chart done nearly every time it fell out of a channel? Yeah, look what happened in your next 2 days. You retested it and then pulled back from it. So the one time it didn't retest the channel might be at least worth a confirmation day for the other times. You break above it here, you come back and retest it here. That's a new channel. These real skinny channels, these are the easy ones to trade, aren't they? You're in, you're in, you're in. Oh, crap. Next day, confirmation day. Got a doji. Next day started going down. I'm out. And would have still made money from buying it on the retest of the failed channel. You failed out of your channel. What did it do right here? Came right back and retested it, didn't it? And then started moving up again. this trade would have hurt you. Unless it was unlike the other one that gapped down below the channel, where it closed at the top of the channel and gapped out of the bottom. You saw this one close outside of your channel. But I want you to look at something here. Did it ever do a kiss back on this channel? This one right here, the one I drew right here. Really? Looks to me like it did a kiss back on the channel. Oh yeah, you'd have lost money on the trade. I'm just being honest with you. This calls trade, you'd have lost money on. But as we progress through this, it closed outside the channel. The next day, it comes back, retests it. That says, hey, you got a new channel. Look here. You close outside the channel. You know, you gave it that confirmation day. Wow, well, I'm just going to stay in it. What did I do here? What did it do here that it didn't do each of these days? It retested the channel, gapped down the next day. At that point, I'd have exited that trade right there. Who cares that it gapped up the day after that and went for 2 more days? After retesting this channel, it's saying, hey, I'm in a new channel. You just got to watch and figure out where that channel is. It gapped up above. It came back and retested. It actually retested it twice here. And gave you a new channel. Now, it's gotten a little bit ugly. If you'd have been in this one here, you closed above it, you'd have stopped out here, right? Why? Because it broke above your top line, and then it came back below it. That line would serve as your support. But overall, what would you say about channels on your daily chart with DuPont? Oh yeah, that's how Coach Mike made so much money on DuPont back in 2013. That's what I would say about it. Because until we started our old focus group and put DOW on it instead of DD, you can ask Cliff and Howard, I traded DuPont like crazy. I was a DuPont trading machine. I only traded long on it though. I never worried about a call or a puts trade. And all I would do for trading it was use the channels. Matter of fact, it's probably one of the best, not just like trend line charts, but channel charts you may find. You know, and let's just look at this recent time here. You see how crazy this has been? Yeah, you've been slightly going up, but every time you make a move, you give it up the next day. You make a move, you give it up. You make a move, you give it up. That's a pain in the butt to trade, isn't it? But you see, even if you're running a channel here, it's pretty easy to determine that the up channels that we got to trade in the past were really sharp up channels, weren't they? And quite skinny. Which isn't the case right now with DuPont. Even though this channel is going slightly up, it's kind of going which direction? Even though it's slightly up, sideways. And if you're trading options and you hear sideways, what should you immediately do? Turn around and walk the other way. Options traders, we love up, we love down, we hate sideways. So yeah, once you start to see a sideways channel, and don't even try to convince yourself, well, it's kind of going up. That's not good enough, is it? It's kind of going up is translation for this is really going to hurt. I'm probably going to lose money on this one. But what up channels gave us the best trades? Which up channels gave the best trades? The narrow ones, but think about those channels I had on my chart. I mean, even look at this one. It would have had to break the down channel before you got in. Was that really that good of a trade? Because you wouldn't have been in it till like here, actually this day, because when it broke above, you're waiting on the kiss back. And you consolidated, now you're buying it out of the consolidation break and you're putting you a channel line on it like this. So what did you get? This day, one big day, and then a few little days. Was that really that good of a trade? No. The answer is no. It's a very simple answer. The best trades followed steep down channels. So big, wide, somewhat flat down channels. They followed steep down channels. Right? So before you go long in DuPont, what might you want to look for DuPont to do? Yeah, have a steep down channel. But when it pulls back, it really doesn't pull back for very long. You simply need to get to where you can develop a down channel on it. And then trade when it breaks above the down channel, right? Not even anything difficult. Now, one other thing with DuPont, I wouldn't scalp DuPont, even though DuPont has weeklies available. I think it's a chart that could hurt you there. But I would not be opposed to you using a 1-hour chart instead of a daily chart altogether. Why? Or we can go to like a 4-hour chart. Why would it be okay to use a 4-hour chart or maybe a 1-hour chart instead of a daily chart for DuPont? Well, your direction would be seen pretty easily. I mean, it's even though you're going to have more candles on a 4-hour chart than you do a daily chart. Remember, with a 4-hour chart, basically each day is going to have 2 candles instead of 1. So it's like 2 days worth of swing trading every day. A 2-hour chart would be like 4 days worth of swing trading every day. And a 1-hour chart would be like 8. You'll still identify the trends, but because some of the moves are not $5, $10 moves like some of the other stocks, what are they going to help you do faster? But at the same time, not too fast. Get out or enter and exit. Because you'll see that your actual channels will still fall in the same place. Those channels will still be in the same place. You're going to stop out of this one, clear over here. Or when it falls back in your channel. Or once you determine another channel during the trade, just simply mark it and, oh, hey, time to stop out. I like the 4-hour chart for DuPont because it'll allow you to see what the daily chart shows, but see it with 2 candles every day instead of 1. It's kind of like the before lunch and the after lunch candle, if you can think of it that way. And the 1-hour chart, and actually I'm going to go to a 2-hour chart first. The 1-hour chart gives a few false senses about it, but the 2-hour chart can allow you to trade about 3 weeks out. And because there are weeklies available, trading 3 weeks out is pretty good. And I wouldn't say 3 full weeks. I would say, a minimum of 2 full weeks, which means if tomorrow's Wednesday, we wouldn't want to be trading ones that expire at the end of next week. It'd have to go the further week out. And what you'll find as you develop your channels, no, you would not have stopped out of this here. you would have stopped out of this here, right? You established your channel, it broke above your channel, and it pulled back and fell within the line. You could have been in a 2-day trade for a $1.50 move. That gave you about 45% gain. And even though the 1-hour chart will show you those same things, way too many times, and maybe it's just me, I've kind of gotten scared out by the 1 minute or the 1-hour chart when I've traded it, trading just a couple, 3 weeks out. So the 2-hour chart, gives me 4 candles a day. And then I can take that 2-hour chart and still derive the channels on it. And really kind of get a better sense of the trading on it while trading 2 to 3 weeks out on the options.